Need funding for your real estate investment deal? Longhorn Investments is professional, reliable, and fast. Currently serving Texas, Tennessee, North Carolina, Missouri, Alabama, and Indiana, Longhorn Investments, LLC is a direct private lender offering short-term acquisition and renovation capital to real estate investors for both residential and commercial assets. With Longhorn Investments, you can receive up to 75% of ARV, finance up to 100% of cost, close in 3 to 5 business days, no income requirements, a streamlined, simple approval process, and no prepayment penalty. Formed in 2008, Longhorn Investments has funded over 4,000 loans since its inception and includes complementary businesses, including a title company and real estate law practice. Longhorn's wealth of experience puts them in the unique position of being able to help investors throughout all aspects of each transaction. To get started today and see why Longhorn Investments is the superior lending experience, call and speak to Lawrence Hopkins at 314-749-7616. That's 314-749-7616. Or visit Longhorn Investments at longhorninvestments.com. Longhorn Investments. Hard money lending simplified.
Universe. Media. Network. 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 Network.
Good day. I'm Samantha Smith with your United States real estate investing news. In our current pandemic environment, the price of homes are in an apparent skyrocketing trend, shattering pricing records across the United States. Especially in smaller cities, potential home buyers are running a greater than normal risk of losing the property on which they have their heart set. Quoting a report by Carter Evans of CBS News, Jennifer Steinzer and Garrett Farber wanted their first house to have a backyard for a dog and no stairs. They got their home for $295,000 after being outbid on 10 other homes in Las Vegas. Quote, "We got a 3-story, no backyard, and a cat," Farber said. When asked why she was willing to make so many sacrifices, Steinzer said, quote, "Just to get our foot into a house and have a roof over our head," end quote. When asked if this was their dream home, Steinzer and Farber said, quote, "No, not at all," end quote. Quoting CBS News, desperate buyers, record low interest rates, along with low inventory and cash-rich investors, are driving prices up, nationally 19% higher. But cities like Kingston, New York, are up 35%, Boise, Idaho, is up 33%, and Las Vegas is up 15% according to the National Association of Realtors. One 1,300-square-foot, one-bath home in Tiburon, California, went for more than $2 million, 58% above the asking price, end quote. Las Vegas realtor Mike McGrath said, quote, "If you're putting in asking offers, you're automatically a loser," end quote. Quoting CBS News, one of McGrath's clients paid $45,000 above the listed price for a home in Henderson, Nevada, end quote. Again quoting McGrath, "They barely got in the house," end quote. With the realization of this climbing market trend, many home shoppers in desperation are resorting to elaborate tactics to woo property owners and real estate agents. Again quoting CBS News, after getting outbid on 20 homes in Bozeman, Montana, Sean Hoxford resorted to wearing a sign on the street that read, quote, "Please, sell me your home," end quote. Mega landlords have created an alliance with real estate tech firms, enabling the purchase of homes even before the public has a chance to notice. Smaller landlords who have cash reserves are trying to perform similar property buying tasks, but are faced with massively stiff competition up against farther-reaching connections and much deeper pockets. In what seems to be an unfair scrubbing of U.S. housing markets with a fine-toothed brush, salivating Wall Street firms are tapping into new property sources that everyday Americans just cannot access. Quoting Patrick Clark of Bloomberg, Cerberus Capital Management and related entities bought more than 200 houses in the first quarter through next-generation home flippers called iBuyers, including 138 from Open Door Technologies Inc. The pipeline to Wall Street from Silicon Valley often means the homes never hit the open market. Cerberus isn't the only large landlord turning to the tech companies. Invitation Homes Inc., the largest single-family landlord, tapped iBuyers for more than 5% of the 700 homes it purchased in the first quarter, Chief Executive Officer Dallas Tanner said on a recent conference call. Tricon Residential Inc. and Donald Mullins Pratium also bought homes through this emerging channel, end quote. Quoting Lawrence Yun, chief economist at the National Association of Realtors, "We're in housing shortage, and whatever inventory institutional landlords are gobbling up, means there's less available to first-time home buyers. In that sense, the investors are an obstacle to the everyday buyer." End quote. Again, quoting Dallas Tanner, "The supply of single-family homes remains well short of growing demand," said Tanner, the Invitation Homes CEO, on the recent conference call. There is so much capital coming into the space that everything is pretty competitive." End quote. Are you holding any short-term properties? Well, hold on to your portfolio hats because things may begin to shift a little as short-term rental behemoth AirBNB reports the loss of $1 billion, creating real estate investor panic. With the obvious worldwide lessening of travel, it's really no surprise to receive such information from a company whose activities play parallel to the travel industry as a whole. Quoting Laura Agadoni of The Motley Fool, in a letter Airbnb released to shareholders, it reported a total first quarter 2021 net loss of $1.2 billion, end quote. The way things are shaping upward in various U.S. markets, there shouldn't be an intense cause for alarm. Again quoting The Motley Fool, most of Airbnb's losses for Q1 2021 weren't because of day-to-day operations. Here's the breakdown of where the losses came from. $377 million due to the repayment of loans, $292 million for a mark-to-market adjustment for warrants associated with a term loan, $113 million impairment loss regarding San Francisco office space, and $229 million was stock-based compensation expense. So, most of the reported $1.2 billion loss, as you can see, had to do with repayment of past debts and an adjustment in the value of its stock, end quote. The positive news for Airbnb is that it reported increased revenue of $887 million in the first quarter of 2021, which is more revenue than in both the first quarter of 2020 and the first quarter of 2019, all still while the pandemic looms. The boost in Airbnb's confidence is connected with the number of vaccinated people ages 60 and up who are searching more on their site at an increased rate of 60%, which also coincides with the rising search of longer-term rentals of 28 days or more. As Airbnb goes back to basics, it feels strong about the rebounding economy due to the fact that people have been cooped up for so long and the perfectly positioned ever-increasing post-pandemic luxury of working remotely. As a real estate investor, if you haven't started to build your short-term rental portfolio, now may be an opportune time to do so. For our quick content suggestions this week, we have 24 secrets to flipping a house for profit from MSN Money, 12 pro tips on making your home lighter, brighter, and more sellable from NOLA, and experts weigh in on the pros and cons of real estate investing from Yahoo Finance. To research further, see links and more from these reports in the news notes. I'm Samantha Smith for United States Real Estate Investor News, UnitedStatesRealEstateInvestor.com.